Hello to those of you who are looking to qualify for an FHA loan and you're wondering what the income requirements are. I want to just touch on it briefly here. And then if you have any more questions, definitely reach out to us at FHAlenders.com, and I will link down below to our article on this topic where you could read more and also find a way to contact us. So the income requirements are going to be, well, first it's the income documentation requirements. So let's talk about that. If you're a W-2 wage earner, you need to provide your W-2s, your last 2 years W-2s, your last 30 days pay stubs, and your last 2 years tax returns. Sometimes if we run the application and if the application is great and there's no issues, you could get findings from the system that says that the tax returns do not need to be collected, but at least up front to get pre-approved, let's get your pay stubs and your last 2 years W-2s. Okay, so documentation, if you are self-employed, we have another video we just did on that. You need your tax returns. You need your full tax returns for the last 2 years if you're self-employed to qualify for an FHA loan, and that could potentially pose an issue with you if you're writing off too much. Okay, so now when it comes to the actual income, you're going to be capped for an FHA loan at a back-end debt-to-income ratio of 56.9%. 56.9% of your total gross income can be your proposed mortgage payment, principal, interest, taxes, and insurance, combined with any other monthly obligations that show up on your credit report, whether it's a car payment or minimums on your credit card bills. All of those things, maximum 56.9% if your credit scores are good, because there's that trade-off. If the credit scores are not good, then the system may not allow it to go up to 56.9%. And the other thing you'll find is that most lenders are also not going that high. They're putting their own self-imposed overlay or cap on the debt-to-income ratio much lower than 56.9%. So you do have restrictions on the total income, but it is very flexible. Going to that level is pretty high, and it could put a strain on you if you have a bump in your income, a little job loss or something else in your life that would prevent you from making your mortgage payments. Another factor that would come into play when an underwriter is looking at your file is if you have reserves, if you have extra payments set aside, enough money to make extra payments, that will allow your income to be stretched a little bit more so you can qualify for more. Hopefully that helped to answer some of your questions there. If you have any more, please visit us down at the link below in the first pinned comment and also in the description to FHAlenders.com. If you found this helpful at all, please hit that like button for me. I do appreciate it, and I'll speak to you next time.